Welcome back, everybody. It's another episode of Bold Real Estate Investing. I'm your co-host, Chris Angel, here with your host, Bill Dean, to talk about the velocity of money. Bill,
oh, yeah.
This is exciting, man. The velocity of money. I just like the sound of it.
That's something very, very important to think about.
Especially when what the heck is it? I don't even know what it is. What is it?
Velocity of money, the speed of money. This whole topic is about how fast is your money coming back to you.
Mm-hmm. Yeah, okay. I like that.
If you look at a bank, you're looking at the slowest form of velocity, like savings accounts right now.
Yeah, right.
What do you get? 0.043% interest. So how long would it take for you to, let's say you deposit $100. How long would it take to get $100 back out of it?
I don't know. Longer than I'd be alive.
Like 2,200 years. I don't know.
Yeah, right?
Something Forever. Ridiculous.
Yeah.
So a big thing that a lot of people do is they start saving up this money and they're like, hey, I have, let's say $10,000 or $50,000, or let's say it's even larger than that. Okay, I have $100,000, and they sink $100,000 into their first investment.
Mm-hmm. Yep.
And it spits out a good investment. Let's say roughly $800 a month or $1,000 a month.
Okay.
Well, how long is it going to take to get back to 100,000?
Good question. Yeah, good point.
So take about 7.5, 8 years to get back your $100,000.
Is that what they call a cash on cash return?
Yeah, well, it'd be ROI or cash on cash.
Okay.
But it's just, in essence, you can either have the cash flow or cash on cash in your hand, or you have the opportunity of that to refinance the house and pull the cash out that you have in equity.
Right.
And either way, it still takes about that 5 to 7 years if you're going to pull the equity out.
Right.
Depending how you buy. Of course.
So I've thought this way. Sinking a bunch of money in, it would just be, I don't even have to put 20% down. If I just buy it, the whole house in cash, then all the rent is cash flow. And that's a good thing, right? But it sounds like you're saying there might be another alternative with better velocity for my money.
Okay. Yeah. So what you're saying does work. And if you are cash rich,
just loaded.
Yeah. If you're loaded, just go ahead and do it.
Loaded. Yeah.
Yeah. I mean, go ahead and do that. In the back of my head, the little devil's advocate's like, well, that's a lot of money at risk because it's only protected by your insurance and by your legal entities. So
right. Good point. Yeah.
So I kind of like having a bank on my side because they typically have more money than me.
Good point.
But yeah, so you could do that. But even if you do that, you have $100,000, you stick it in $100,000 house that pays $1,000 a month, let's say.
Right.
Well, you're going to have to wait 100 months to get all your money back.
Right.
So 8 years, whatever.
And it's not liquid. It's stuck. I mean.
Yeah, it's there.
Yeah.
So technically down the road, you can always put a line of credit against the house and use that cash again. Right. But for those of us who don't maybe have that much, or we want to grow faster, the velocity of money is very important. How fast can I get my 10 grand back into my pocket, or my 100,000 in your case? Okay.
So what do we do? What's the strategy here?
Well, I'll just walk you through something I'm working on currently with some clients where they have the money, they know what they're looking for, but instead of we don't want to go just sink it into one investment and then play the slow game.
Right.
So some of the fastest ways to get money back is to flip a house, because that timeline could be as short as a couple months. And if you have a really hot market, days, and in some places it could take a few months. But if you spend $50,000 to get a house and you get back $50,000 when you sell it, you've done 100% ROI in under a year.
Wow.
That's pretty good return. And that velocity time is very short. And even if you spend 50 and only make 20, but it only takes you 3 months, that means you can take 50 and make 30 4 times in a year, or 20. And that's $80,000 to $120,000.
Wow. Right.
To now invest more in.
Yeah.
So that's where that velocity comes into play.
Is this why people like flipping so much? Because flipping has become really popular. Is this why? Because you're getting money back fast?
It's part of it. I mean, pardon my way of saying it, but flipping houses is sexy right now.
Right. Yeah. No. Yeah.
They make it look good. They have these gorgeous people doing it. And
Yeah. Right.
if real life were like that, sweet.
Right.
But the fact is, it's not always, pretty contractors and,
Right.
things happen. But people like flipping just because they get that big paycheck all at once.
Right. Why not just because there's good velocity of money there? Why not just flip all the time? Like why? Is there any velocity of money in buy and hold?
Yes.
I'm totally like going ahead of you. Like you're going to walk me through it. I'm just like ambushing you with questions.
No, that's perfectly fine. No, there absolutely is. Just a normal, you go find a realtor, they go find you a rental, you go to the bank, you put 25% down, sit on it. And if you don't get an extraordinary deal or anything creative, even if, let's say you found a diamond in the rough, someone's selling their parents' old house, they don't really care, they don't need the money, they'll give it away. Sweet. Then your velocity of money could be rather fast because let's say it's a $200,000 house in a $300,000 neighborhood. You'll be able, and the rent is good. You're only putting down, let's say 50 grand, but you could, because the loan's so small, you might be able to pull 800, $1,000 of rent out of it. So that's only a 50-month payback,
right?
Which is still better than the 10-year. We talked about the 8-year. So we're looking at velocity. It can come in different ways because let's say you find a deal that regardless, even if you bank finance, if it's paying you even 15% or 20% ROI, well, that cuts your timeline down to 3 to 4 years to double your money.
Right.
Because you can do it two ways. Like I said, there's the cash flow. So all the income minus all the expenses and the mortgage leaves you with that cash flow. You can set up a good deal where you have high cash flow, or you can focus on the fact of maybe the cash flow isn't the greatest, but because I use one of those handy dandy contract for deeds, I'm paying down huge chunks of principal so that maybe in 2 years I can refinance, pull all that equity out, and now I either have doubled my money or even more so. You can keep on investing.
Yeah. It's so funny because I can find myself I'm not a stranger to the conversation of real estate investing. I've read real estate investing books. I've been to real estate investing seminars, not to the extent that you have. But even as you talk, I can find myself semi-glazing over simply because there's so much. It's Pandora's box, like of all the things you can do. And I just find my brain going, I don't know, Bill, I just want you to do it for me. Like I don't think I know enough about, I don't know what I don't know about it all.
True.
I think this is where investors get in trouble.
Yeah. Well, I guess, we're kind of going down investment strategies, and that can be its own deal, but really just look at what does it cost you to make that money?
Right.
Like, what does it cost you to save up 20 grand? Does it take you 4 months? Does it take you 4 years?
Yeah.
And if it takes you 4 years, you want to be very careful that you're not going to stick it in something that pays you back even slower than that.
Right.
Because the goal is to really just grow our assets or our net worth.
Yeah. Right. Yeah.
So to your point, I mean, I can keep going down that, but the better the deal is, the faster it pays you money back.
Yeah.
So the slowest payback are very, very safe deals. So like currently I actually have a 55 and plus apartment complex listed in my area. And because it's 55 and older, you don't have to worry about noise complaints. You don't have to worry about parties happening.
Right.
But it's a very, very stable investment. So they don't have to kick out a lot of ROI because you don't have the headaches, you don't have the turnover.
Right.
They move in, they plan on being there until they can't be there versus your discount low end apartments where the kids are just trying to get away from parents and partying and wrecking things. So the higher the risk, typically the higher it has to pay you, but it's really just making sure that you're keeping track of where you want to go. So like these investors that I'm working with, we're starting on the flipping side. We know it's not a long-term investment strategy because one, super time, it takes so much time. So you have to find the property, you have to negotiate the contract, you have to find the contractors, you have to manage the contractors, you have to deal with whatever troubles are coming up, and then you get that big paycheck if the market hasn't changed.
Right. Yeah.
So it's high risk, high reward.
And then what are you doing with them?
So you can, depending on how you are set up and what you need, the goal is just to keep building up that cash reserve so that we can then buy either something bigger or buy more things.
So
it's gonna
keep
be kind of
flipping until you have the cash reserves to do what you want to do next.
Yep. So let's say I want to buy a $1 million storage unit complex.
Okay.
I like storage units because no electricity, no running water, no tenants.
Right.
I mean,
right.
They're wonderful for that.
Yeah.
People pay monthly to put stuff there that they don't use. So I personally really like them, but I know it's going to take like 300,000, 400,000 to buy that. Well, if I only have 400,000, I could either just go rush out and find one. And if something happens like a gigantic hailstorm, where's the money going to come from?
Right.
You know, I still have deductibles. And so you want to have that buildup. So we're going to do two strategies. One would be flipping to up the cash, but the other is that we're going to be 1031 exchanging, which is a tax deferred sale. So like right now, if I flip my house, or if I'd go and find a house, buy it, flip it, and sell it in under 2 years, I'll be paying capital gains on that, 25 to 35%.
Right.
So if I make 50, I'm giving back 12,500. That's painful.
Yeah.
So if you're trying to build cash, you're going to have to pay some taxes. But if you 1031 exchange it, you can't pull the money out and put it in your pocket, but you can roll it into the next purchase.
Got it.
So doing both of those means we're slowly building towards the bigger investment, but also building our cash reserves so we can keep growing it.
Got it. Okay, good.
So that's where that speed of velocity of money comes in.
Is that where you do a 1031 exchange into just the next stepping stone before you could get the storage unit? Like the storage unit would be like the next thing after?
Yep.
You're 2 moves away. You're going to sell this one and roll that into the next investment property with a 1031 exchange, tax deferred. And then when you sell that second property, then you can roll that into the rental property?
In all reality,
unit?
It's probably going to take 3 or 4 flips before.
Okay.
Unless we find something magical, but
sure.
Because that's just to grow the cash pool. And then the next step was once we have some of those active, fast return, high risk going, we're going to focus on short-term lease and rental options.
Oh, okay.
And this is where I was talking a little bit earlier about you can make cash flow or you can make equity. You're always hopefully making both. But if you can find a deal where someone can't sell a house and they're willing to rent it out and they want nothing to do with it, maybe you can make $300, $400, $500 a month off that. Or if you have a house of your own and you want to put someone up for a contract for deed short term or a rent to own where they just pay rent and then they buy it still at market price, well, all that rent is profit, and then you get all the prices for your house.
Got it.
And those 2, 3, 4, 5 years, but you're only out your down payment to lock in the contracts. So it's just that you have to have that 10 or 20 or $30,000 in earnest money to lock up the house to pull that other income off it.
Right.
So you have the flips going, the long 2 to 3 year stuff, and then the goal at the end is that you have not only that 1031 exchange, but then you can buy other things, like maybe you want a vacation house so that when you retire, you can go move down to Arizona.
Yeah, there you go. I like it. Yes, please. That's awesome.
So that's where that velocity, I mean, you need to have a goal. You want to know what's going to be coming in, what's going out, because you want to have reserves for the things that happen in life. But you just want to make sure that when you're investing it, it's doing more than what you can do, because it is kind of nice if you just go check the mail and there's a rent check in there.
Yeah, mailbox money.
Yep.
I think what's cool about this conversation, like I said earlier, I glaze over, but it's not because you don't explain it clearly. You do such a good job of explaining it. I think just when I start to hear all the different nuances to what I could possibly do, all my options and choices, and I just start to go, I start to shut down. And I think it's important to mention that, because I think a lot of people who have thought about investing, maybe you listening to this right now, you've had ideas about investing, but then like you start to get a little bit into it, and there's all these options and choices, and it's easy just to shut down, especially dealing with scary stuff like my money. Like I'm going to give my money to stuff and I don't know how it's all going to work. So the easiest thing to do is to talk to somebody that knows what they're doing. And Bill, what's so cool about the show is the more we talk, the more I just get to know how many of the nuances that you see. Like you see it and you know it. And that's very, it's very comforting for me. I'm just going to fly you out and help me do all this.
Coming soon.
Coming soon, right. Coming soon. You can hire Bill to fly out. I love it. It's so good.
Yeah.
Super valuable.
So this isn't necessarily like a money-making thing. This is just one of those concepts that you need to be aware of.
Yeah.
Because like I said, when it comes to real estate investing, buy a single family house, something that you're familiar with, something that you understand. Yeah. Start there. But like I bought a duplex and I didn't even want to rent out my basement right away because it was my first home.
Yeah,
but I didn't make it maybe 45 days and I got a door knock. Hey man, no one's living in your basement, and thus I started renting.
Right.
But long story short was when I had, I was working, I was paying the mortgage out of my work. I was just saving the money from the rental. Well, pretty soon it took less than 10 months to get all my down payment back for buying my house.
Wow.
10 months.
Wow.
And then I kept accruing it, and I saved enough to pay almost cash down, but another 25% down the next property.
Wow.
That's just off one unit, just spitting out, because it felt like I used an FHA loan, so a 3.5% down. So we're only talking, by the time it was all said and done, about $8,000 with all the fees and paying taxes and insurance. But yeah, at $750 a month to get $8,000 back.
Wow.
Like I said, that first 12 months of rent, and I had all my money back sitting there and just kept growing it. So that's the velocity I'm talking about it. Flipping might have been quicker, but the risk involved, way higher.
Right. Yeah. That's the thing, right? That's what we're talking about. This whole conversation has been about strategy. And when you know what you want or what you're trying to accomplish, then you meet with somebody smart like Bill that can ask you questions to kind of figure out the best strategy, because there's different strategies for different end games. Like it depends on what you're trying to do. And when you're able to clarify what all that is, then you can actually apply the best strategy for what you're trying to accomplish.
Exactly. Stephen Covey's 7 steps to, I'm forgetting.
What was the 7 habits of highly effective people?
There we go. Begin with the end in mind.
Yeah.
That is literally what burns most people in real estate. Is they think about now, they don't think about the end. The exit strategy is the only one that really matters.
Oh yeah.
So knowing hey, I'm buying this rental, I can improve it and sell it for a profit. I can maybe convert it back to a single family if it's a multi, if that's a hot market. Sweet. Or maybe you can convert it into a duplex and make it worth more.
Yeah.
You just need to know your market, but knowing what you want in that whole strategy, and knowing that, I have these exit strategies, because last thing you want to do is burn down the house,
Yeah.
Like knowing that before you start really, really helps narrow down, because there's a million things you can do. It's just what fits, what am I comfortable with, and where do I want to end up?
It's so good. So good. So Bill, if people want to have that kind of a conversation with you, if they want to say, hey Bill, this is what my end game is, can you help me create a strategy? How can they contact you?
Absolutely. Just go to BillDeanHomes.com on my contact page. Leave me just a simple email or message, because believe it or not, it's not actually too complicated to reverse engineer where you need to go. So if you have an idea, if it's that dream house in, I don't know, Cabo, you want a vacation rental down there, let's work backwards. Let's find out what it's going to take.
That's so good. I love it. Yeah. BillDeanHomes.com. Hit the contact page and reach out to Bill there. Bill, I'm assuming you'll do some kind of just a free upfront conversation with people to kind of hear what they're doing. And
oh yeah, absolutely. It's absolutely free for the consultation, because the goal is just to help set you in the right direction.
Yeah. Perfect.
And get you to that next step.
Yeah. So good. That's killer. You guys, you should go to BillDeanHomes.com, hit the contact page, and you guys can reach out to Bill so you can schedule a free consultation with Bill to talk about what your investment strategies are. Bill, another great episode. Thanks, man. Bold Real Estate Investing was a great brainchild of yours. I'm so glad you brought it to the world. And thanks for sharing. I look forward to our next conversation where we get to unpack even more wonderful investing wisdom. Until then, Bill, see ya.
Thank you.